Hello, everyone. This is Dino. Just took a little break, went on vacation, just got back, and I'm just going to be recording more videos. One of our friends on YouTube wanted this done. Um, so from the West in Vancouver. So I thought I'll just put something together for condominium insurance coverage. Okay, so the condominium insurance is one of the uh, confusing coverages for a couple of reasons. The condo corporations, they have to have their own coverage for the whole building. In some provinces, I think they call them strata corporations. And so this is the entity, they own the entire building. And so there's just so much going on with the condo. It could be, if you look at the building in the picture, you can see a few hundred units are contained within this. They have a lot of common areas like the swimming pool, the hallway, the gymnasium, so on and so forth. All that has to be taken care of by the condo corporation. And then the unit owner, the individuals, they have to have their own coverage. So the question is, what if a unit owner was negligent and caused damage, and it not only affected his or her unit, but also affected several other units, such as water damage? One of our clients, they left their faucet open in the morning. They were rushing to work, and then the water was running all day until 5 p.m. when they got home. 3 floors were completely soaked with water, and then at least about 10 or 12 other units were affected. So the condo corporation, they turned around and they said that this unit owner who was negligent had to pick up their own deductible, the condo corporation's deductible, which was like $100,000. Because a building like such as the one you're looking at the picture, this could be probably 300 or $500 million worth. Okay, so yes, they do have a huge deductible. And they told our client that you are responsible for this mess. So you have to pick up, you are responsible for all the damages as well as the deductible. Can you imagine how complicated this could get in that situation, right? So that's why I just wanted to start off with that caveat that the condo, if you ever speak to an adjuster and you ask them, what kind of loss is the most difficult one to adjust, they would say condo. Okay, because you have to deal with the condo corporation and you have to deal with your own client, and the condo corporation, they never have enough coverage for the whole building. This is our experience. And they have these huge deductibles. In one case, one of our customers, a condo corporation owner, they have a 500,000 deductible. Okay, because they don't want to make many claims. And some of these condo corporation, they are moving some of the item that they are supposed to be responsible to the client, to the unit owner. So that's what I'm going to give you a short summary of what's going on with the condo. So I'm in Ontario, and so you may be in a different province. So I don't know how it works in your province, but I'm just going to tell you how it works in Ontario. I don't think it will be so different with the condo, but I'm not quite sure, okay? So housing falls within provincial jurisdiction. The activities within the condominium complex must comply with the provincial legislation governing condominiums. So now you have a third entity, the regulators. They get involved because here you have a condo corporation or a strata corporation responsible for like few hundred unit owners in one building. And so they are legally liable for so many different things. Okay, so we have every province, as far as I know, they have bylaws, they have the legislation, the Condominium Act, as they call it, okay? Each province has its own legislation. In Ontario, and many provinces, the relevant legislation is called the Condominium Act. Okay, that's pretty complicated, right? Condominium Act. Okay, all right. Now, there are two bylaws that apply to condo corporations. One is called the Standard Unit Bylaw, which we'll get to in a moment. And the other one is called the Deductible Bylaw. And there's a lot of confusion with this, okay? I'm going to try my best to demystify this, so-called standard unit and the deductible, what they're all about. Before I explain these bylaws, let us see what is happening to the condo corporation's insurance. Okay, just let us put this in perspective, what's going on. In a nutshell, I can tell you there's a crisis going on with the condo corporation. A crisis. It is so bad that in the latest budget, our premier in Ontario, Mr. Doug Ford, he actually talked about two new bylaws they're working on to sort out the problem that is being faced by the condo corporation, the unit owners, the complaints, and all of that. It's just totally out of control. The whole condo building and the unit owners and what they're doing, it's like a runaway train right now. Okay, so here is just a few things. According to the Canadian Underwriter magazine, condominium corporations, also known as Strata, across the country are facing serious headwinds in their efforts to secure sufficient insurance at a reasonable cost. So the condo corporations, they are finding it so hard even to get insurance for the building. Why? Because the loss ratio. The loss ratio is literally going through the roof from the condo corporations, okay? Insurers are pushing premium increases and deductible across the board due to poor insurance industry results. So the insurance companies are complaining they are losing so much money, like millions, with the condo corporation. Some of them are totally rejecting because, see, property is not as much regulated as automobile. So insurance company, they can say, no, we don't want this risk, or we want to get off the risk upon renewal. Okay, because the loss ratio, very poor result. It has been reported that condo corporations have seen increases in insurance premiums, get this, up to 780% in one case when the policy was renewed, and deductibles rise from 25,000 to 250,000 or even 500,000. Just imagine. Okay, so under 500,000, the condo corporation will not be making any claim. So you can see just from this what's going on. So many changes are being considered in Ontario. For example, Ontario politicians debate bill proposing condo insurance changes, licensing of condo managers. There is just numerous complaints by people, the unit owners, on the condo corporation and what they're doing and what they're not doing. So Ontario proposes bill to reform condominium laws. Majority of condo owners, buyers are unclear on insurance requirements. Now, courts, you can see that these are being now tested in the court system. There have been a lot of lawsuits, okay, by the unit owners against the corporation, the strata corporations. The courts examine how condo corporations recoup common area repair costs. So there have been complaints that by the unit owners that they are being hoodwinked. Okay, they are being cheated by the condo corporations because they're asking them to pay. Every now and then they'll come up with the what we call here in Ontario loss assessment. Okay, the loss assessment is the condo corporation coming to every unit owner, and they're asking them to contribute certain amount because they say, oh, we have to fix this, we have to fix that. So there was a class action lawsuit by literally a few hundred unit owners. And so they went to the court and they said, no, we are just being asked to pay every few months. The condo corporation coming to us asking us for money. Okay, so that's why we have courts examine how condo corporations recoup common area repair costs. Okay, whether it's reasonable, whether it's legal, and all of that. So what's going on with this? One of the major reasons is the loss potential in condos. Okay, what do we mean by that? Let's say take, for example, water damage. Now, water damage is the number one claim today, at least here in Ontario. It's not fire, it's not theft, water damage. Insurance companies are complaining they are spending millions more every year to fix water damage. It's so expensive. So let's just put this in context. Water damage happening in a home, in a single home, or in a condo building. So water escape in a detached home may result in a relatively minor insurance claim compared to water escape in a high-risk condominium that can have a disastrous, devastating consequence. Okay, that's what happened. I'm going to give you an example in a moment, okay? For instance, a sink overflowing in the 50th floor unit could potentially damage units all the way down to the bottom floor, resulting in a significant insurance loss. Just imagine how much they have to fix. So here's an example from Alberta, kind of like a case in point. The owner of a residential condominium known as Palisades Park Villas, located in Edmonton, Alberta, sued Aviva Canada, Commonwealth Insurance Company, Peace Hill General Insurance Company, Lloyd's of London, Intact Insurance, and Economical Mutual Insurance. After the insurance denied the condo corporation $4.4 million worth of water damage claim in 2012. And Aviva was the lead subscriber and responsible for coordinating any claims with the other subscriber insurers. Now you're wondering, what's he talking about here? Subscribers, why we are suing, how so many insurance companies are involved in it. So then I'm going to give you a little quiz. When many insurers take on one risk, like in this example, what do you call that policy? Well, I mean, sorry. Oh, I'm on YouTube. So I thought I have an audience here, my my trainees. So I'm okay. I'm doing this for YouTube. So I have to give you the answer now, right? Okay. So it's called a subscription policy. I know, just a quick aside, okay? Nothing to do with the condominium, but I just want you to know, you may wonder why there are so many companies involved. So we call this a subscription policy because the risk is so complex, it's so high that one company is not willing to take on the whole risk. So they will invite other companies. Hey guys, we have this 500 million worth of risk here. So would you guys, want a part of that, like a piece of the pie? So that's why if you see all these big companies that jumped in, including Lloyd's, okay, and they're taking the piece of the pie. And so one company will be a lead company. So in this example, it's Aviva. So they take the lion's share of the risk. And the rest of them, I believe they're given the opportunity, okay, how many percentage you guys want? Okay. So they just prorate the loss and everything. So subscription policy and insurance policy in which multiple insurers share the risk associated with providing the insurance. It is called a subscription policy because the insurers, they participate in the policy by subscribing to it. In other words, insurers can choose whether or not they would like to join in the offering of the particular policy. Okay, so if they don't like the risk, it's too hazardous, then they say no, we don't want a part of that. Maybe next time, right? So this is just for fun. The picture here, near Central Park in New York, 432 Park Avenue by Rafael Vignoli, New York City. Just imagine, average price per square foot in this building is $6,742. Okay, so don't blame me that I didn't tell you about this. Okay, that you missed purchasing one of the apartments. Okay, yeah, so there you have it. And then the penthouse in this building is only $95 million. That's it. Okay, all right, moving on. We're going to say a few words about the Condo Corporation's master policy. You can also call it the Strata condo insurance, okay? In some provinces, they use Strata. Okay. So we're going to talk about two things here. One is called the standard unit. What the meaning of a standard unit and why we call the standard unit, and also the condo master policy of Strata Deductible. Okay. So those are the two subjects we're going to talk about, okay? Make it simple. So what's a standard unit? Let's say you just purchased a condo. It's a brand new condo. It's not a used condo. It's a brand new condo. And you just got the keys and you open the door and you step in to your brand new condo. Everything you see in front of you, the flooring, the ceiling, the walls, the kitchen cabinets and everything, the bathtub and everything you see, if something happened to those like fire or whatever happened, a covered loss must be fixed by the condo corporation, because what you're looking at is called a standard unit. That's it. That's like a pithy little definition of a standard unit, okay? No improvement or betterment has been done. You just stepped in and this is just brand new. So everything you see in front of you, if something went wrong, a loss occurred, it should be fixed by the condo corporation. Okay. So this is defined in the bylaws of the condo corporation that managing this building that you just purchased, okay? I mean the unit you purchased. Okay. So the definition of a standard condo unit is contained within the condo bylaws. The definition clarifies the following. So you may wonder, so why do we need this definition? I just bought a condo, I own it. Okay. I'll get to that in a moment. Okay. Why we need a definition. So it clarifies two things. Number one, which components of a unit are to be treated as standard, meaning insured by the Condominium Corporation and subject of the obligation to repair the unit after damage. 100% the obligation of the condo corporation, the standard unit. Okay. The second one, which parts are to be treated as improvements, meaning insured by the unit owner and solely the responsibility of the unit owner to insure, repair, and maintain. So here is a good example. The original standard unit came with plywood cabinets. So what you did after you purchased the condo, you just ripped them up and then you spent another 15,000, whatever, and then you made them into oak cabinets, like what you see in the picture. So if this, God forbid, one day you had a big fire, everything is destroyed, there will be two parties involved in adjusting that claim. This is where, the adjuster gets so frustrated because now they have to go to the condo corporation and say, hey guys, we need the money because you're going to be making a claim with your company that he gave you the insurance policy as a unit owner. Okay. You're not going to be dealing with the condo corporation. So you go to your claim, your company, you make a claim. So the adjuster will say, oh my God, I had a lot of friends when I was working at TD, adjusters, we have lunch together and they just cry about this condo, these guys, they don't return the call, they don't have enough insurance, the condo corporation, it's just a headache dealing with them, right? So anyway, they don't have enough insurance ever, okay? That's our experience at least. So the adjuster will contact the condo corporation. They'll say, okay, guys, we need the money for the original plywood cabinets because your company will only pay you for the improvement and betterment, not for the original plywood cabinet, okay? So that's how it works, all right? So let's say a few words about the condominium's master policy for the whole building. What do they cover? So that policy covered the buildings and the structures shown in the condominium or strata plan and declaration, the whole building, okay? So it also covers all the common areas. We said that before, like hallways, stairs, and elevators, and roof, and pools, and the driveways, and, gymnasiums, and, in a condo, there's just so many things that people use, like everybody use, but then they belong not to the unit owners per se. Okay, so if something happened to the pool, then, which unit owner is going to fix it? No, the condo corporation has to fix it. Okay, so the condominium master policy will take care of that. The outside of the building. So inside your unit, so you only own part of the wall. even there's a definition of the part of the wall. I mean, just only one wall, but so they define it and how much of that wall is owned by the unit owner. Okay. But then if something happened, the condo corporation will fix it. Unless, you did some improvement, you changed the wall, you did something, to make it look nice and everything. Yeah. So then we already gave you the example of the kitchen, right? So it'll be the difference. Okay. So there is need for an executive body to carry out the duties of the Strata Corporation and to oversee the corporation's affairs between general meetings of the eligible board. So they usually have a board, like a board. Okay, it's like a board of directors. Just imagine, this is depending on how big is the condo. It's going to be like millions of dollars worth, the few hundred people living there, anything could go wrong. Okay. So that's why it's a corporation. Okay. It's run like a corporation. And it has an executive body. It's called the Condo Corporation Council or Strata Council. Okay. That's effectively a board of directors. That's what it is. Just like a corporation, right? Like any other, like a stock company. So just a quick word about the role in a nutshell. They act as the managing body of the condo corporation. They make daily decisions that enable the condo corporation to operate smoothly, and they enforce rules and bylaws. Okay, so that's kind of in a nutshell. Any board of director will be involved in doing all these things. Okay, now let's go to the standard unit. What you see on the screen, the writing here, I copied it from a condominium standard unit. Now, if you want to learn the condo insurance, you need to get a copy of the condo bylaw. You can just go to anyone who owns a condo, and many of them, they don't even know that there's a bylaw, you can get from the condo corporation, their authorities. So ask your client to approach there should be a manager on site, okay, and demand a copy of the condominium bylaws. That's where you can see the standard unit. And why it's important to see the standard unit in the bylaw? That's where you will see the items will be listed, just like what you're seeing in the on the screen here. So all the items that the original condo unit came with will be listed. Now, why it is important for your customer to know this and be familiar with it, and also for you to know this, because what's happening today, because of the crisis, the condo corporation, they are removing many items from these standard units, and they are sending letters to, I'm going to show you an example in a moment. They're sending letters to the unit owners. Hey guys, we got some news. Starting the 1st of next month, call your insurance company and then tell them that they will be responsible for all these. Whether it's legal or not legal, we don't know. But they're removing items from the standard unit. Okay, so now you're educating your client. First of all, they're going to get a copy of the bylaw, and they're going to look at the list of things that are included in the bylaw, which we already said that the Strata Corporation, they are responsible for. And then now they can raise question. Now you've educated them. Now they're going to ask the question when they receive the letter, why we have to do this? This is in your bylaw. You guys are responsible for it. Why should I call my insurance company? Okay, so look at this: original ceiling, original flooring, okay, shelving, closets, kitchen countertop, all of this, pretty much everything, okay, from the original, the condo unit is the responsibility of the condo corporation, okay? So when you're discussing coverage for a condo, make the client aware of the standard unit bylaws and ask to see what items of the condo units are covered by the condo corporation master policy. So they should demand a copy of the bylaws because they are living there and they have a right to see the bylaw, okay? All right. So there's a trend that more and more items are being removed by the condo corporation from the standard unit bylaw, and the unit owners is made responsible for them. These changes have been challenged in the courts by unit owners, okay? Okay, now we are going to move on to the second item we're going to discuss is the strata deductibles, master policy of strata deductibles. So the Condominium Act states that a unit owner may be assessed for the deductible applicable to the damage to their unit if it can be proven that the unit owner was negligent for the damage. Always in insurance, anything that it has to be proven. So if it can be proven that, one of our clients, they left their faucet open in the morning and they went to work, just imagine it was running the whole day, right? So the sink overflows in unit 800 and several other units and hallways sustained major water damage, right? So obviously the customer is negligent in this case. So the condo corporations have the ability through their bylaw to enact an insurance deductible bylaw, whereby holding the negligent unit owner responsible for the entire applicable deductible. So when you set up a condo policy, you need to discuss this with your client. Let them make them aware. If you are negligent for causing any damage, you could be on the hook for the deductible, and you need to find out. This is why I told you need to get a copy through your client, the whole bylaw, and there what the deductible, condo corporation deductible is. And every unit owner, they have a right, okay, to know what coverage the condo corporation has, what's included in the standard unit bylaw and everything, okay? So you need to be aware of that. Why you need to know? What's your business to know what the master policy deductible is? Because of the negligence of the client, it's going to backfire on him. If he's negligent, he or she will be asked to pay the deductible. So you need to know, because the company that you just signed a policy with for your client may not have that much of deductible offering. So in one case, so we had with Wabanesa, so the standard master policy deductible coverage from Wabanesa policy, 25,000. And guess what? Nobody knew, after all this training that I do here, the broker never discussed that with the client, okay? So broker should have said, the sales broker, Mr. Client, I just want you to know that there's something called master policy deductible, and your policy provides maximum 25,000. And in fact, they could have made it to up to, I think, 75,000 through endorsements for extra price. They didn't discuss any of those. There was a loss happen and the customer was completely negligent for that, okay? Then the master policy has $100,000 deductible. So now we are telling the client, oh, we only have $25,000 deductible for you. So you are responsible for 75,000. Imagine that. And the customer said, I'm going to call my lawyer because you guys never told me this. What is all the deductible you're talking about? Okay, so what I'm saying here is you need to know what the master policy deductible is and how much it is. And then you also need to know, as a broker, sales broker, how much your company is giving for this client. And you need to make your client aware of that. And if you call your company and you say, do you guys have any endorsement? Can I increase this amount? And they say, no, this is the maximum we can give you. Then you tell your client and document it. Documenting your condo application. I advise the client the master policy deductible coverage is only 25,000, for example, and the client is aware that the condo corporation has 100,000 deductible. Please do your homework, because we have seen court cases that customers are taking the brokers to court because the broker never mentioned anything. Okay, so document what you told the client. Okay, so it'll protect you in the future. Okay. So if water damage originated in your unit, in your client's unit, and caused damage to several units at 2 floors below you, and it is deemed your fault, then the responsibility for damage would fall back on your personal condo insurance. Okay. In addition, let's suppose the master policy deductible is $50,000 and the damage is less than 50,000. The condo corporation say, hey, we're not going to make a claim because less than our deductible. What's the point? And they're going to shift the whole thing to the unit owner. You say, you guys go and make, because you made the mistake, you caused the damage, we're not going to make any claim. It's less than, okay, 50,000, you go and fix it. Therefore, it is very important that you find out what the master policy deductible and ensure that the customer has adequate deductible coverage. So if you're in a different province and the company that you're dealing with, and they say for extra premium, yes, we can match the deductible of the condo corporation, please do that. Explain to the customer, because Mr. Customer, you're not walking around with $100,000 in your pocket. And your deductible, we need to increase it. It'll increase your premium a little bit. Okay. That's just a few words about the condominium policy. Okay, the strata policy. Okay, now let's just shift gears to the unit owners policy. This is pretty straightforward. Unit owners policy. Okay, so basically, the way the condominium it's being, the coverage is calculated is so flawed. Okay, this is so flawed from the beginning. I don't know how many decades ago they started this. Okay, so people are so underinsured. Why? Because we're not looking at the size of the condo, how much is the loss, a potential fire loss will cost to fix it. We're just starting with the personal property. We are basing all the calculation based on the personal property. And you ask your customer, okay, Mr. Customer, if you look around in your condo, how much stuff that you own? And the answer will be, not much. We don't have much stuff. Oh, really? Okay. So we are starting with a really very bad item to start the coverage. But anyway, that's what it is. So today, that's how we calculate. We start off with the personal property, and then we add the improvement and betterment we just talked about. Then we also have unit additional protection. And you're saying, oh, you just said that everything in the unit should be covered by the Strata Corporation. Yes, and that's why we use the word additional. Why we didn't say unit protection? The additional, because the condo corporation, they never have enough insurance. Okay, so regulators have been pressing the insurance industry to come up with something to help the client, the unit owners. So we added the unit additional protection. Okay, so we're going to fix it. Okay, and then we're going to go after the condo corporation to collect the money for that. That's where it gets so tricky. But we do have some protection. So the customer, your client has a policy with you, they have a loss, they can make a claim. So we're going to fix it, and we're going to deal with the condo corporation to see how much they owe us. Okay. Then loss assessment, I kind of alluded to earlier that, the common elements in master policy deductible, there are two things. The condo corporation will come to each unit owner and they'll make an assessment, meaning that, hey guys, it's almost like, bring your poor box in a church, right? So for donations, right? So yeah, that's what that's what they do. And they say, okay, we have something to fix now. Okay, the swimming pool, something happened, whatever it is. Oh, we have to do some maintenance. Okay, so they will come very often to the unit owners and they will ask for money. So this is covered by the unit owners policy. Why? Because this is like a perennial issue for the unit owners. It's not going away. So the insurance industry, they added what they call the loss assessment. The assessment is made by the Strata Corporation on each of the unit owner, okay? And we'll just, in a moment, I'll tell you what the common elements in the master policy deductible. So the loss of use of the unit, this is very similar to the homeowners, condo, and even a tenants. Okay, so what if something happened? Then we're going to put them up in a hotel, and what if there's a forest fire and they're being forced to move out, evacuate? Okay, yes, they will get the hotel and the additional living expense. Okay, so we'll get to that in a moment. There are a couple of things that we have to discuss in the loss of use. It's very similar to the condo owners, homeowners, as well as even tenants. Then, of course, the section 2, as you expected, will be all about the liability. So third-party liability, voluntary medical. So I'm going to give you an example for each of those, okay? So what you're looking at on the screen, this is the entire condominium unit owners policy, okay, the whole thing. So let's say a few words about each of them and how they calculate the amount, how we decide the amount, okay? So remember I said to you, we are going to start off with the personal property. So customer is saying in this example, okay, let's say all the furniture, electronic, clothing, and all of those things, let's estimate like $50,000. Okay, so we're going to take the 50,000 and then we're going to multiply that by 250% to come up with the unit additional protection. So that's the coverage available for the unit additional. So in our example is 125,000. And we're going to again multiply by 250,000 for the loss assessment. So there are two components of the loss assessment. When the condo corporation will come to the unit owner for some donations or whatever it is, okay? It's not a donation, but they'll make an assessment, okay? So we'll get to that in a moment. So that amount, the maximum is 125. Then the improvement and betterment, go back to the plywood cabinet made into oak cabinet. So, okay, there's a good example of the improvement and betterment, will be equal to the personal property amount, which is 100%. So in our example, it's $50,000. Okay, so this is how traditionally the condo coverage is being calculated. Okay, and of course the liability will be 1 or 2 million. Okay, the third party liability. But many companies today, what they do, they combine these limits. Okay, and then they're like 600%, like 250 and 100%. Okay, 600%. So you can make a claim within that blanket limit. So that'll be like a single limit homeowners policy. Okay, so let me give an example. So let's say if you left it at multi limits, like in the days, this should be like a multi limits, and the customer is making a claim for property damage like $70,000, but the limit is only 50,000 in the multi limit. So the insurance company will never pay a single cent more than 50,000. But then most companies now, they combine all this. Okay, so when you combine and you have one amount, so when you have a single amount, it's like a new feature. That's all it is, okay, to help the client. So let's say in this example, the client is making $70,000 personal property, it'll be paid. So we're not going to restrict to 50,000, okay? So most companies today, they have a blanket limit like 500,000, 1 million, whatever it is, okay? So the personal property, of course, is covered in mostly 3 different places. The property in the condo unit where the customer lives, and then the property when you travel anywhere in the world will be covered, just like homeowners. Okay, and then also if you're moving to another condo, as long as you are moving it, like you rented a U-Haul and you're moving it and something went wrong, it'll be covered, you can make a claim. But then if you give it to a common carrier, okay, so ABC trucking company is carrying your stuff from point A to point B, and they drop the ball, okay, there's something went wrong, then we're not going to give any benefit to them. So they're called a bailee, okay? So you have to tell them that, Mr. Customer, so you are not going to move this stuff on your own. You're going to engage a common carrier, a trucking company. You better tell them to have their own coverage for your stuff. Make sure they have their own policy, because the insurance companies are very skeptical about dealing with the common carriers. They are negligent. So as soon as they know that they can use the customer's policy, and there have been incidents that we have seen that, theft has happened on the way, and it is like an inside job. And yeah, we have come across several cases like that. Okay. So remember that just a little point there. If the customer is moving themselves, if something went wrong, yeah, we will cover that. And the condo, they usually have a storage area in the basement. And if something went wrong, like water damage or something, and your customer stuff is destroyed, yes, we'll cover that. And people, some of them, they get older when they go from a home to a condo, they miss their garden. And we have some customers with very expensive tropical plants and everything, in their balcony. If something went wrong, yeah, we can cover that too. All right. So this is just a typical property coverage. So one thing that you want to pay attention to is people, we have customers downtown Toronto. They're living in 2,500 square feet condominiums. Would you believe that? This is where, when you start with your personal property, you're going to have very less insurance for those humongous condos. Okay. So that is changing. A bylaws coming, I think they're going to use like a calculator to see how much the whole unit will need to replace it, the whole unit, not just the personal property. Okay. So surveys show that more than 70% of the condo unit owners do not have adequate insurance coverage for the personal property they own. So this condo unit, even it has a bowling alley, okay? Just imagine that. All right. So here's an example. It's a very famous theft that happened many, many years ago in Toronto. It's a very high-end area like the Bridle Path or something. And this, this theft was, to give you an example of the movie Heat, came in the 1990s with Robert De Niro and Al Pacino. Very nice movie, one of my favorite movies, Heat. There, the very high profile theft these guys are doing is something like that. Because this house, like 7,000 or 8,000 square feet or something, and located in a very affluent place. And these guys, they were able to break in and take the entire safe, okay, entire safe. Now, why am I talking about this? As a broker, okay, you have to spend time with your client to see if they have any high value items, okay? And many brokers that I deal with, they don't ask for the high value item because we have a number of things. They're subject to special limits, okay? Because some of these items are very attractive to thieves. So the insurance industry, they came up with a list of items: jewelry, coin collection, stamp collection, sports personality card collection, business property that's used in your home or in your condo, okay? All of those, they put special limit, that the maximum they're going to give you, right? So you have to spend some time with your client asking them, do you have any paintings, artifacts, jewelry? Okay, and then you look at the underwriting manual and you see this is the special limit, Mr. Customer. So many company that we deal with here, the special limit on jewelry is only $6,000. And we have many people, a customer that we have from different cultures. They have so much collection of jewelry. Okay. And if they say, oh, I have like $100,000 worth of jewelry, what do? You tell them take all the jewelry to a gemologist and get them appraised. And you're going to charge them more, and then you're going to insure them over and, on top of the policy called a floater. Okay, you're going to create a new floater, and then you're going to charge them more, and you have to get the appraisal, an official appraisal. Okay, so if it's lost or stolen, whatever happened, then we're going to look at the appraised value because we are charging premium on the appraised value. Okay, so I thought I'll just give this like a side note. When you're insuring a condo, don't just listen to the customer. Oh, I don't have much stuff. Oh, okay, then I'll give you the minimum. Some of the broker, they do that. Oh, the minimum is $35,000. Is that okay with you? Oh, sure, that's okay with me. Did you ask the customer, did you have any high value items? No. Did you tell them about special limits? No, you didn't. Okay. Anyway, in this case, what happened was it became a big court case because this safe consists of $2.5 million worth of stuff, including the ring from I believe the hockey, the memorabilia. So during the trial, an expert was called to determine whether the broker had met its standard of care. The expert testified that the broker failed to meet with the insured to review in detail their personal insurance needs. They had like $100 million worth of business. They're living in this huge house. They had a yacht, okay, huge collection of jewelry and everything. The broker didn't even visit them. Failed to gain a full appreciation of the property and lifestyle considerations which would affect their insurance needs. Failed again to gain a full appreciation of the property and lifestyle considerations. I already said that. Failed to advise the insured with respect to existing gaps in their coverage, including low and inadequate coverage limits for jewelry. and failed to advise the insurer the additional insurance to provide coverage for the jewelry was available, like, through a floater, okay, or make recommendations regarding adequate coverage for jewelry. And make a long story short, the broker was held responsible for loss of property worth 2.3 million. Even the E&O policy, the errors and omissions policy, which is supposed to protect the broker, refused to pay that because they have an exclusion on the E&O policy for ordinary negligence. Yes, we are here to help you guys. Ordinary negligence. Okay, everybody, okay, no one is perfect. Okay, so yeah, that's what we have the E&O policy. But for gross negligence, because this was determined even by the judge, this is not an ordinary negligence at all. It's a gross negligence of the customer's lifestyle, finding out, not even visiting there. And the E&O policy said, no, this is an exclusion. Why should we reward you and help you when you're so bad as an insurance broker? Okay, so I just wanted to just give you a perspective of how we can get into trouble if you're not doing your homework as brokers. Okay. All right. So providing adequate coverage for customers. Here are just a few examples of court cases where the verdicts went against the insurance broker for not providing adequate insurance coverage for the customers. Okay. So you can see this just a few lawsuits. Okay. I can show you a lot more lawsuits I've saved up. Okay. I use them in my training. All right. So here's an example of a special limit. So we had this customer. To put special limits in context, here is a related example. A customer had an Aston Martin 177 Factor bicycle stolen and made a claim. Okay, so just with the name, you should know there is something unusual about this bike, right? I mean, how many bikes are called this Aston Martin 77 Factor? Okay, but the broker never asked any question about, what high value item she had, nothing. Okay, and then she made a claim, the bikes were stolen. So the customer was promptly told by the adjuster that she will receive 1,000 in claim. Why? Because that's a special limit on bicycles. Bicycles is one of the items subject to special limits. Okay, and that's 1,000 is the special limit. And then the adjuster also advised the customer, if you want my opinion, don't even make a claim. What the point? Because you're 1,000 deductible on your policy. When you make, so why would you make a claim? Because you're only going to get 1,000 and you're going to pay 1,000 deductible. Okay, so don't even. She was so mad. Okay, and then she said, "What do you mean? I actually bought this bike for $39,000." And she has sent in the invoice, sent in the website where she purchased from, the pictures of the bike and all the details when the policy was set up. And the broker received all of those things. He didn't even open the email, and he just attached them to the system, to the broker management system. That's it. So customer is an elite bicycle enthusiast. She had purchased her Aston Martin bicycle for $39,000. She went to the media immediately. During the interview, she said that her insurance broker never brought up the special limits on the bicycles and put the blame squarely on the broker for doing such a poor job in insuring her property. Do you disagree with her? She did everything possible to make known. Okay, I mean, the question should have been asked, do you have any high value items? Okay. She's not going to say, oh, I have this, I have that. We need to ask the question. The brokers, we have to ask the question. Okay. Don't expect the customer to tell you everything. All right. So here we have the combined condominium special extension, the owner occupied. So contains a combined blanket limit that I told you before. So you just put it together there, 100%, 100%, and then 250, 250. Okay. So some company, they offer like 600% of the personal property limit for the section. It includes the loss assessment, unit protection, and the improvement and betterment. So you can make a claim within the single limit. I already mentioned this to you. I'm going to move on. And then the unit additional protection, we already said that. If you recall the standard unit. Okay, if something went wrong in the condo corporation, they're supposed to fix it. but they never have enough insurance. So we will step in and we will do the work there, and then we will go after the condo corporation. Okay. This is an actual bylaw that I got a hold of, and see how they made the bylaw. They inserted these words except, except, except. Okay, so they are rewriting their bylaw. I don't know whether it's legal or not. This way, there are several court cases pending right now. Okay, so this is how condo corporations are removing items from the standard unit bylaw. And look at this. Important notice. A broker sent this to me. Toronto Standard Condominium Corporation, number whatever it is, has 10,000 insurance deductible for property damage. All unit owners need to be aware that in the event of a damage as a result of an act or omission by the unit owner or any resident, tenant, invitee, licensee, or anybody even visiting your place, the owner of that unit will be responsible to pay the deductible. Okay, so this is only 10,000. We have clients with 500,000 deductible. So unit owners should review their policies with their insurance broker to ensure that their personal homeowners insurance policy includes a clause that states the insurance company will pay 100% of the condominium corporation deductible. You see, so the condo corporation, they are sending this reminder to the brokers. Okay, you have to see that if your client is negligent, that you have to see in their policy that they have enough deductible, and this is our condo deductible that we have on our policy. So your client will be responsible for it if they're negligent. Okay. So the 18th Council of Insurance Brokers here, Arthur J. Gallagher, largest condo insurer in Canada, what they're saying here, Mr. Tom Gallagher is saying this. Condo boards and managers are also facing budgeting issues, unable to anticipate what premiums and deductibles will be the following year when the policy renews. Finding the right coverage is also harrowing for many corporations and unit owners. We are seeing corporations trying to pass some of the insurance responsibilities onto the unit owners, said Gallagher. So, and also with the higher deductibles as much as $500,000, we are seeing corporations with the ability to charge those deductibles back to the unit owners. Okay. Here is one of the companies in Ontario. Look at the previous limit. Okay. So they have this, your coverage for your unit when the corporation's policy doesn't have enough or any insurance. In some cases, they don't have any insurance for what, I don't know if that happened. Okay. Then this is their limit. Okay. Number one, master policy, this is Strata policy, does not have any insurance for the event that caused the loss or damage. The previous limit was included within the blanket limit. We talked about the blanket limit, right? But look at the new limit, only 50,000. Huge drop. Okay. Now the second one, loss to your unit is not covered. The amount of damages within the master policy deductible. Okay. So they say, hey, even if you're not negligent, we're not going to make a claim because this is below the deductible, so you're responsible for it. Yes, that's what they're saying. And before, this company provided up to, within the blanket limit. Okay, but now it's reduced to 100,000. That's it. Okay. Now, improvement and betterment. We're just going through the condo unit owners coverages here. I already gave you a couple of examples. So unit owners are free to make improvements to their units. So even if you bought a condo from a previous owner, and let's say they spent a lot of money to do improvement betterment, of course you're paying them for that. Okay, so that's why your policy now will cover that. Whatever improvement betterment done by the previous owner is also covered because you paid for it when you purchased it, right? All improvements to a condominium unit by the current owner and any previous owners become part of the building. So these upgrades are not covered under the policy of the condo corporation, but this is the unit owners coverage will respond for that. Okay. So John purchased a new condominium unit and renovated the kitchen, replacing the original plywood kitchen cabinets with a new oak cabinet at a cost of $30,000. A fire destroyed this kitchen, including the upgraded cabinets. So the condo corporation's insurance policy will pay only for the cost of the original plywood kitchen cabinets. So John's condominium unit owner's firm will pay the difference in the cost between the original plywood kitchen and the new oak cabinets. Okay. So the loss assessment has two components. One is for the common elements, okay, for property and liability. I'll give you an example in a moment. Common elements, we already said, the elevator, the hallway, the gymnasium, the swimming pool, okay, all of that. And then also the master policy deductible, the condo corporation will come to each unit owner and they will kind of cry, and then they will ask them to contribute something. Here's an example. The condo corporation might charge a special assessment to each unit owner if the insurance it purchased for the building on behalf of all unit, you have guessed it, is insufficient, which is always the case, okay? And they say, hey guys, we have a huge tree fell into the pool and it's going to cost us like $80,000, $100,000 to fix it, and we don't have enough insurance, okay? So we want your help. Okay, so the loss assessment section of the insurance policy will pay, insures your customer, okay, will pay up to the specified amount of insurance for the insured share of any special assessment imposed by the condo corporation, okay? So this is where the adjusters are so frustrated because some of these assessments are not legal. They cannot prove why they need so much money. Some of them are so overblown. Okay, some of them are so frequent, loss assessment. And this is where it becomes so challenging to deal with the condo corporation, right? So this is an actual case, hey, this happens, right? So the guy was probably a little bit tired. He thought the swimming pool is the parking spot. Okay, he just went straight to the swimming pool. So there are two conditions to this coverage, the common element. The assessment must be valid under the Condominium Corporation governing rules, and there must be a direct loss to the collectively owned condominium property caused by a peril insured under the condominium unit owner's form. I mean, if there's a peril that is an exclusion, then your policy is not going to respond. For example, in this case, the driver was charged with DUI, driving under the influence, and the claim was denied. So your policy is not going to respond. So the driver himself here will be responsible for the whole mess, for pulling the car out and everything, right? Okay, finally, the loss of use of the unit, there's nothing to it. So we have additional living expense, like the hotel expenses. Condominium policies include coverage for additional living expense or loss of use of your unit, okay? So which pays for extra cost to live while your house is not habitable, right? So this same for homeowners. Even if you're a tenant, you have this coverage. These expenses can include rent, hotel stays, restaurant meals, storage fees, etc. So this coverage only pay the extra expenses over and above what the insured would have spent had no loss occurred. You know how many times we receive the entire bill. So let's say one of our customers was staying in a hotel for 2 months. There was a significant water damage. And then he sent us a big bill for food and the hotel, everything. And we said, okay, you're claiming 100% of your food expenses. So if you had stayed at home, if no loss would have occurred, how much normally you pay for your food? Oh, okay, this is how much we pay per week. This is how much we spend per week. Okay, then we're going to deduct it. It's not that you just send a whole bill. That's what it's called additional living expense. But normally you'll get the entire bill from the customers. So another coverage we have here under the loss of use of your unit is the fair rental value. So basically what it is let's say you're in a condo and you have an extra room and then you were renting it out and you're getting like $1,000 for it. And now there's a big water damage happen and it's going to take a month to fix it. So your tenant has moved on, Okay, they're not paying the rent and they moved on, whatever. And so the adjuster will give you that 1 month's rent. Okay, so it's called fair rental value. Because of the loss, you're losing that rental income. So they'll include it in your claim settlement. Okay. So the third part of the coverage is called access prohibited by civil authority. So let's say a forest fire is raging and your customer's condo building is in the area, and the civil authority, they come and they say you have to evacuate by force, right? So what do? They can call the insurance company. Hey, I'm being forced out of my residence because of the forest fire. And so, yeah, we'll give them the hotel expenses. So it'll be the additional living expense. Okay. All right. So finally, the section 2, we have E, F, G, and H. So personal liability, voluntary medical payments, and a couple of other things. Well, let's go through this. Okay. The third party liability, pretty straightforward. Something that your customer did and it affected the third party. So this was a claim that we handled. So we had to deal with 4 lawsuits in this because the customer had a fire in his condo unit. And then you can just imagine the smoke, okay, the amount of smoke. And there were at least 3 people, they had lung issues, emphysema, whatever it is. The condition became so bad, okay, they were already suffering from some lung issues. And this smoke made them so bad, sick. And so we had a big lawsuit claiming a lot of money, okay? And one of them was kind of catastrophically injured or whatever it is, because he was in a wheelchair, he couldn't even move, and he was inhaling the smoke for a long time, and it was such a mess. So that's what happens. Third-party liability will respond. They have to respond. Personal liability insurance is a component of a condo unit owner's insurance policy, just like homeowners, tenants, even automobile, right? Liability will cover the cost of damages that you or other people covered by your insurance, like your spouse, your children, or whatever you're living with you, are responsible for causing. So the personal liability portion of your policy will also cover the cost of defending a lawsuit if you're sued, as well as any resulting judgments up to your policy limits, of course. If you purchase 1 million coverage, then they'll only go up to 1 million. Okay, that's why you should always tell your customers to purchase more than 1 million. So the 1 million is no longer sufficient, okay? And the lawsuits in Canada overall has increased by 300% in the last 5 years. 300%. We are becoming more and more like the Americans. In the US, I lived there in a few states in the past, and they love to sue each other. Okay, they have so many lawsuits going on. Anyway, we are copying them. Many insurers pay the defense cost over and above the limit of policy. So this is the only place that you will see in the liability coverage that some insurance companies, they are willing to pay the lawyer's fee and everything, any defense cost, even if it runs over and above the policy limit. No other coverage will provide that. They'll go up to the limit, but this is the liability, the only one. They actually will go even above the policy limit to cover the legal expenses, like the defense cost, okay? So according to the US News and World Report, virtually no regular condo owners insurance company will issue a policy for a house where a German Shepherd lives. It's no wonder, as Forbes magazine indicated, that German Shepherd ranks number 4 on a list of 11 of dog breed that most insurance companies resist insuring. Imagine millions of dollars the companies are spending, 400 million a year in the US. And they account for over 1/3 of all condo insurance liability claims. Okay, so dog bites, slips and falls, a trip down the stairs can not only result in costly medical bill, but also a lawsuit is a possibility. Okay, so that's why you should sell the maximum third-party liability coverage to your customers, okay? So the coverage F, voluntary medical payment. So the keyword is voluntary. Why do you say voluntary? Because the insured here, your customer, cannot be held legally responsible for what happened here. okay? But then he or she volunteers to take care of it. So we have a small amount, usually it's $5,000, okay? And the insured can make a claim and just to settle it in good faith. So 2 years ago, the Butlers invited neighbors over for a barbecue. While playing lawn darts, Bert threw a dart and struck a guest in the face. And Bert is always getting into trouble. It took 2 operations to repair the bone damage. 2 weeks ago, their friend Peter came to spend the weekend. While going to the table for dinner, Peter stumbled over his own feet and fell. Nothing to do with the homeowner. He wasn't responsible for it, hitting his head on the hardwood floor. An ambulance was called when Peter spent the night in hospital when released. So there are 2 examples here, okay? So medical expenses incurred by others who are unintentionally hurt by an insured, your customer, or who are accidentally injured on your premises are insured by the policy. You can make a claim. There's no deductible applicable. And so whether the insurers are liable or not, and that's what it's called voluntary medical payments. Okay. Same thing with the voluntary damage to property. So last weekend, the Butler's neighbors, Lily and Red White, held a garage sale. On the Friday evening before the sale, Red asked Bert for help in moving some of the heavier furniture. So when they were moving a china cabinet down a set of stairs, Red went too quickly, causing Bert to drop his end of the cabinet. While there was a little structural damage, the glass in both doors broke. And we estimate like $50 to $75 to repair it. So this insuring agreement pays the unintentional direct damage caused by insurers to property of others, even though they would not be legally liable for such damage. Same thing. Okay, this is small coverage available. Okay, you can make a claim. And the voluntary payment for damage, here another example of a child who's less than 12 years old. Even if he purposely damage some property, it'll be covered because he's a child. Okay, so he's not of age of reason, right? So last week, 11-year-old Benji tried out the community baseball team. He did extremely well at the tryouts and expected to be made team captain. However, okay, there's some kind of nepotism going on here. The coach's son was given that honor. As circumstances would have it, Benji lost it. Okay, the coach and his family lived just across the street conveniently from the Butlers. So when Benji came home, he absolutely lost it. Okay, and then he was so frustrated, he picked up a rock. So that means he deliberately damaging something and deliberately threw it through the kitchen window of the coach's home. So you may think that this should not be covered because it's deliberately done. No, the cost of repair is estimated at $200. The insuring agreement provides under coverage G for the payment of direct property damage intentionally caused by an insured 12 years age or under. And Benji is 11. Yeah, you can make a claim. We're going to give him a pass. Okay. All right. So finally, voluntary compensation for residence employee. So maybe you may have like a permanent maid working in your home, or maybe someone just coming on the weekends. Okay. Either way, if this person hurt herself while, so she's looking at her iPhone and climbing the stairs or something, and she fell, God forbid, and on her own accord, but you know what? You're going to call the insurance company and make a claim under the voluntary compensation for residence employee in good faith. You're not going to tell her, oh, it's your fault, you should have been more careful. No, 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 no. Okay. So we're going to do this. That's why it's called voluntary. To provide all occasional residence employee with limited. So it says occasional residence employee, like somebody who comes on the weekend. Okay. But then the permanent residence employees are insured only when stated on the coverage summary page. So they become almost like an insured, like a name, like an insured, additional insured on your policy. They should be listed if they are permanent. Okay. All right. So final point here, we see a trend in Ontario that the condo owners, the condo corporations, they are handing down the keys to the unit owners even before the condo is ready for occupancy. They're still doing some work, they haven't done the final inspection by the city and whatnot. And we see a lot of people calling in, oh, I want to get coverage for my condo. So now when you ask them, okay, have you made the closing? Have you gone to the lawyer's office? Oh, no, that'll probably next year. Then how did he get the key then? Oh, the condo corporation people, they came and we had a little party, donuts and coffee. And they said, okay, here is the key. You can move in. And don't forget to call your insurance company and tell them that you're already here. And if something goes wrong, then you will be responsible. You'll make a claim. So what you need to do if that's the case, okay, you ask them, have you done the closing? And if they say no, you can only give them a tenant's policy because there is no insurable interest when you don't own the piece of property. And the condo corporation, they're playing this game, okay? So there's an occupancy date and there's a closing date. So if they say, oh, yeah, we went to the lawyer, we closed it, and oh, okay, so your name is on the ownership, right? Yeah, it's all done. Okay, now you write it as a condominium policy. Okay, if not, just give them a tenant's policy and make sure you tell them to call the condo corporation and tell them, okay, guys, I called my insurance company and they asked me the question of whether we closed the deal, and we said no, because we haven't closed it. And they said that they're only going to be responsible for my personal stuff, my contents, my personal property. Okay, like my shoes and my toothbrush and stuff like that. Okay, that's it. Electronics or whatever. Okay, anything happened to the condo unit itself, you guys should be responsible. That's what they told me. Yeah, our customers are calling them back now. Okay, so keep an eye on that. Okay, occupancy and closing date. All right, my friends. So I thought it'll be finished like an hour. So I think it's like an hour and a half. But anyway, I know you all have a lot of patience. So I didn't want to bring it to like two sets here. So I'm just going to close now. And I will see you in my next video. If you haven't subscribed, please click on subscribe. And if you have any comments about the video, please put your comments. I always look for the comments, okay? And I will respond it as quickly as possible. Thank you, everyone.